Hello land buyers, Willie G here, and today I'm providing you a different video today rather than just providing you another property, which is always great to have new properties on the market and new listings available. Today I want to just explain to you why I really believe investing in land is a significantly better investment than purchasing stock in the stock market and investing in broadly in the market. And so there are a few different reasons I am suggesting this. I'll clarify the details. So first, I would like to suggest that when you invest in the stock market, there are thousands and thousands of companies out there, but there are tons and tons of people who are really looking at each individual company, each individual market and sector, and it's not really fair to the individual investor. Not to say it's not fair, but there are people who dedicate their livelihood, their jobs. They spend 80 hours a week looking into which companies to invest in, which sectors to invest in. I guess my first point is there are institutions, people much smarter than the average Joe, much smarter than you or me, who have capital to invest, and they are really putting their tools, their mind, their money, a lot bigger money than a lot more money than the average individual holds into the market, and therefore they capture most of the inefficiencies. They are the market arbitrageurs, the ones who take advantage of a lot of the inefficiencies in the market already. So that's the first disadvantage the average investor has. With that, there's also imperfect information. When you buy a company, you don't know everything that's going on with the company. A lot of the information you just don't have. You don't have control over who they're going to hire as the next CEO, what the CEO is going to do with the strategy. It's a lot out of your control. When you invest in real estate, when you invest in vacant land, you know exactly what you're buying. You have a much better idea of where the market is going in terms of where the city is going, where the property is in. If you're local, then you have an idea of exactly what's around there. You can do a lot better research online into really what and do your diligence on an individual property. So those are a couple of the first main reasons I suggest that buying real estate is a better investment, just because you have more control and there's not nearly as many people looking at the assets. There's not thousands and thousands of people looking at a vacant lot out in the middle in somewhere in California or Arizona or New Mexico or wherever. So those are a couple of the main reasons. But secondly, I want to get into the financial reasons. So when you invest in the stock market, so I'm using this a little different software today, trying to share my screen and my face at the same time. Let's see if it works. Not sure. There it goes. So I hope you can see my screen. Nope. Let's make that bigger. There we go. So let's move this down. All right, so that's better. So let me just show you why I suggest the market is quite a bit overvalued at the current state that we're in. So the Shiller PE index is Dr. Shiller is a famous economist. He won the Nobel Prize. He's very well known in the academic community. I believe he works at Penn. He's a PhD, obviously, professor there. And so what he's done an analysis. The price to earnings ratio in the stock market just shows at what price the stock market is broadly trading at relative to what the companies are earning. So generally speaking, you want more earnings relative to the price you're buying at. So at the current state, just because if you get more earnings, obviously you get that cash flow back in dividends, and the company is really, I mean, you're getting more profitability per dollar that you spend in the stock market. I hope that makes sense. It might have explained it a little bit confusing, but you generally want more earnings a company has relative to the price you pay for it. So you really want a lower number that indicates that the market is more fairly valued. When there's a lower number, when the PE ratio is high, that indicates that the market is very it's overvalued. So when the PE ratio is high, so currently he has an analysis. He looks at the last 10 years earnings compared to the price, and I usually use him when I'm trying to value the market and see if I should invest today. Today I don't invest in the stock market at all because of I do a little bit, but I've taken most of my funds out of the stock market for the reason that I really do believe it's overvalued today. As you can see, we're at the second highest peak in history now. So I've followed this chart for pretty much my whole investing life. So this I followed it back here, over here, and so I've looked at this, and I'm not just pointing this out because it's high today. I've followed this for a while, and we're currently at 32. You want to be at closer to 15 is probably fair. So I would argue that the stock market price is arguably double where it should. I mean, there's a lot of other factors like low interest rates that go into it, but I don't want to get into that. But we are at the second highest peak in history. This was 2000, the 2000 crash. Everything obviously toppled then, and I don't see this as a good point to invest in today. So that's the second reason. I'm not a big fan of investing in the stock market today. The third reason I wanted to show you is just when you look at vacant land. Let's just go to, I don't know, I was just looking at 29 Palms the other day. So I had a property video that I posted in there. So let's just looking at this market. And there's so many less eyeballs looking at the market here. So let's go to acres. Let's go 5 to 10. So when you look at a market like this, there's so many less eyeballs looking at it. There are less financial investors out there. And the market is wildly inefficient. It is so unbelievably inefficient. It's actually laughable. There are some people out here who are trying to get $100,000 or more for their property. Some of it might be justifiable. I'm not looking at each individual one, but most of the time it's just people are trying to get more out of their land because they, for some reason, perceive it to be more valuable than others. While the people on the lower end of the market are really these people are looking to sell. I don't know. I mean, people are just want to sell. They're willing to accept lower prices, and a property that's worth $20,000 or $30,000 is not necessarily any worse or any better than a property that's worth $5,000, $10,000. So the market is, in my opinion, wildly inefficient. You can find way more deals out there on the market. It's not the same as investing in stocks. There's not nearly as many people looking at individual markets, not nearly as many people doing diligence on each specific property. So you have much better advantage as a buyer if you are smart and you do your diligence and you invest in the right property. You can gain so much equity right up front. And I don't know, it's just a different, it's really just kind of a different market, and there's so many different advantages you could have. So in a market where the stock market is trading at twice what it's worth, I think you could, and you can also buy, you could buy land, you could buy real estate at really 10, 20, 30, 40 cents of what it's worth. In my opinion, it's a no-brainer, and that's why I no longer am very invested at all in the stock market, and why my portfolio is really long land, and I have quite a few more. I mean, I have a ton of land properties and investments in real estate, and why I am much more bullish and supportive of investing in raw vacant land compared to investing in the stock market. So I hope that was informative. I hope I explained myself okay, and I hope you like this kind of video. Again, it was a little bit different, but I hope you enjoyed it, and thanks for listening. Please subscribe to my channel, hit the like if you have listened this far, and thank you very much.